Welcome to SaaT System, where we decode digital trends and help you invest smarter. Today, we're talking about market correction specifically, why most people panic and lose money while the top 1% quietly build their fortunes. Here's the key truth you need to understand. Corrections don't destroy wealth. They transfer it. So, what exactly is a correction? It's a drop of 10 to 20% from a recent market high. It's not a crash. It's not the end of the world. It's just a healthy reset. Think of it this way. Markets rise in waves, and sometimes they need to breathe. It's like an overfilled balloon slowly releasing pressure to avoid popping. This process shakes out the weak hands, the emotional investors, while the strong hands, the ones with a plan, stay firm. Now, why do corrections happen so often? If you look at history, almost every single bull market has at least one major correction per year, along with several smaller pullbacks. The causes can be anything: fears about interest rates, inflation numbers, geopolitical events, or even just widespread profit-taking. But the real driver behind it all is psychology. When everyone starts thinking the market can only go up, that's when danger builds. A correction resets that sentiment, bringing things back to reality. Let's look at what we call the bull market staircase. If you zoom out on any long-term chart, you'll see a clear upward channel with higher highs and higher lows. But inside that channel, you'll also see sharp pullbacks followed by new highs. The market climbs like a set of stairs. It takes a step up, pulls back a little, consolidates its position, and then takes another step up. These corrections aren't failures. They are a necessary part of the bull run. They build the foundation for the next leg up. So, why do 99% of people lose money during these predictable events? It all comes down to psychology and a few critical mistakes. During an uptrend, everyone feels like a genius. But as soon as the market drops 10%, the media starts screaming, "Recession is here. The bubble is bursting. Crypto is dead. Again." The 99% react emotionally. They probably use FOMO to buy near the top, maybe even with leverage or on margin. Now, faced with scary headlines and margin calls, they are forced to sell at the bottom. And just like that, their wealth is transferred from their weak hands into the strong hands of those who are waiting for this exact moment. And that brings us to the secret of how the 1% win. While everyone else is selling in a panic, the 1% are buying. They are calm, patient, and most importantly, they have liquid cash ready to deploy. They are disciplined. They know that a correction simply means that high-quality assets are on sale. For them, fear in the market is just another word for opportunity. They see discounted Bitcoin, discounted stocks, and they start buying. The market always punishes impatience, but it generously rewards conviction. So how do they do it? They use a strategy we call TDCA, which stands for triple or double down dollar cost averaging. Normal dollar cost averaging, or DCA, is when you invest a fixed amount of money on a regular schedule, say weekly or monthly. Our TDCA strategy adds a powerful twist. When a correction is triggered, let's say a 10 to 15% drop from the high, you increase your buys. You double or even triple your normal investment amount. Why? Because the best risk-to-reward ratio exists precisely when fear is at its peak. This is how you supercharge your portfolio and how real wealth is compounded over time. Corrections are not just something to survive. They are healthy for the market. They flush out wild speculation. They reset inflated valuations. They test every investor's conviction. And ultimately, they provide the fuel for the next powerful rally. At SaaT System, we have a few survival rules to help you navigate them. First, only invest money you are prepared to hold for the long term. Second, avoid leverage and margin completely. Third, always keep some cash on the side as ammunition. Fourth, buy only high-quality assets you believe in. And finally, think in years, not in days. Looking ahead to 2026, we see several drivers pointing to a strong upward trend. Easing liquidity from central banks, the ongoing AI boom, clearer crypto regulations, and a wave of institutional money finally entering the space. But make no mistake, corrections will come along the way. And when they do, they will be your opportunity, not your downfall. A correction isn't a punishment. Think of it as the tuition you pay to achieve long-term wealth. With every dip, the 99% will panic and lose, while the 1% will stay calm and buy. The only question is, which one will you be? If this message hit home for you, subscribe to SaaT System for more insights. And be sure to visit SaaTsystem.com to access our dashboards, tools, and in-depth TDCA guides. Master the corrections, and you will master your wealth. Thanks for watching, and I'll see you in the next one.